Hello everyone, welcome to Added Trade. Today we're going to be seeing the Nifty and Banknifty levels for 27th January, the monthly expiry, and also wishing everybody a happy Republic Day. Now coming to the Banknifty chart, this is a 5-minute Banknifty chart that I've opened along with the daily CPR levels. I'll just come to the levels that I marked. First, let me just go with the CPR levels. We got a nice down move on Monday. Nice down move on Monday where we made nice money, but we failed to capitalize on this up move. Two of our stop loss hits. One we tried a short attempt, a stop loss hit. One we tried a long attempt, again then stop loss hit, and then we stopped for the day. If two trades my stop loss hit right, I cannot stop for the day. That's something that I've learned over the years. See, one short attempt was, there was a beautiful entry in the morning, but the problem is we didn't either hit the previous day low. Just this purple line is the previous day low. This was the S1 for day before yesterday. See, even though after getting this red candle and getting this green candle, if we had touched this previous day low or S1, definitely we would have entered with great confidence. We kind of had a feeling that the price might come down, retest this and then bounce, but the retest never came, just went straight up, so kind of missed it. The second short attempt that we took was here near the CPR where we got this rejection. Again, took stop loss for that. Then the next trade was over here when kind of this day's high was almost like breaking out the day's high, and even this Camarilla pivot S3 I think was here. Okay, when this almost this day highs was breaking out in this candle, we took a long entry. Then immediately when this down move came on this candle, we took stop loss, and then the market bounced again. If I just bring this line down for example, see, we got a beautiful, we went up, came here, retested this support area and then bounced until R1. So since two trades are stop loss hit, we kind of stopped trading for the day. Now coming for the trade possibility for tomorrow, I'm just going to shift to this 15-minute chart so that everything is clear. Now the levels that I have marked is, before the CPR levels, we'll just see the support and resistance based on price action. See, we have one very good resistance here where we almost had a double top here. The price went down, came up. Again, we have taken resistance here. If we start trading above 37,750 on Thursday, we might see this level of 38,200. Now this entire area can act as resistance between 38,170 and 38,300. So if we get a nice entry here and the price comes until here, probably we'll book some profits. If this price is taken out, 38,300 is taken out, then we might see even 38,800. So that's a plan on the upside. And in case the market slips, the first support can come at 37,250, and then the next support is at 36,940. So this would be the support and resistance for us for Thursday. But personally, according to my experience, see, this is the chart where I have the daily, weekly and the monthly CPR, all CPR levels added. The dotted lines is the weekly CPR. This lines with the marking is the daily CPR. As today is a trading holiday, we have one more CPR that's being printed, but these big lines that you see, that is the CPR for tomorrow, and anything that is cross is the monthly CPR. See, we have a pretty wide CPR compared to what we had yesterday was a narrow CPR. So based on my experience and what this wide CPR states is, the market can be sideways. It can either be between the CPR or between this previous day high R1, or it can be sideways between S1 previous day low. So our plan for quick scalp trade is, see, whenever we have this white CPR, wherever we open, now say we open at close to previous day high, take resistance, we might get one quick dip and then the market might remain sideways. The same thing on the downside, if we get a say gap down, either we'll get some reversal from S1, a quick reversal in the morning and then be sideways, or probably a quick dip until the previous day low and then remain sideways. So basically I'm expecting the market to remain sideways based on CPR. But we have other news factors also that's going to come in for Thursday. One is we are at the monthly expiry. The second thing is on I think on Wednesday we have this Fed meeting. They'll be announcing something about the US Fed rates where the global markets can react based on this. And the third news factor that can come is the budget. Like even this budget move can affect this trading on Monday. So though the CPR is wide, if initially we get a sign for the first 1 hour that the market is sideways, we might avoid trading. We'll just look for scalp in the morning, like between 9:20 until 9:45 or 10. Look for a scalp, then avoid trading. If the move comes with either of these three scenarios, right, because of the monthly expiry or the Fed meeting, something to do with the Fed meeting, or the budget move, something related to the budget move can come, then we'll trade based on these levels. Like if we go long, we'll probably exit here. If this breaks, probably we'll trade until 38,800. And if we get a break of this level, probably trade until 36,900 along with these daily CPR levels. That is this. We have resistance at 3800 R1, R2 is 38,600. So we'll even make use of the CPR levels and trade if we get the moves. Otherwise, according to me, I do feel from my personal experience and learning about CPR and trading on CPR, we might have a sideways day, especially after having two good solid moves, volatile moves on the downside and upside. Now, even for Thursday and Friday, this might not happen. This is the daily chart of Banknifty. This level might not come at Thursday itself, but we'll never know. It's not far away. This trend line that I've drawn, we are just say about 700 points. So it can very well happen even on Thursday. If we come closer to this trend line, right, this trend line from this all-time high until the recent high, if we come until here, we might take some resistance at this trend line, black trend line. If we break this, probably we can see further upside. But this trend line is something that we can keep a track on either here, or we can even place it here just to exit. In case we come up, we can even take support or resistance on this trend line. Just wanted to show that. And looking at our fib levels, what we saw previously, see, there was a possibility that I had mentioned that we could take support at this 50%, or if that breaks next, we could come until this 0.61%. But looks like we have bounced from the 50% area, which is pretty good. So let's just wait and see if this bounce continues, or are we going to get another sell-off. See, now from this overall trend, the next level is 50% is coming in at 17,926. If that is taken out, then the 0.61% is at 38,800. So a lot of levels pointing at this 38,800. One is we have a fib level there, and then we have even a CPR level there. We have R2 at 36,600 and R3 at 39,850, and we also have the weekly R1 over here at 38,500. We will have to keep a watch on the weekly pivots as well. See, because the weekly CPR is wide and over here, right, in this area, for tomorrow it will continue here, and the daily CPR is here, my view is we might be between the weekly and the daily CPR and remain sideways and get one nice move in the end based on for the monthly expiry move. So that's for Bank Nifty. Now just looking at the open interest for Bank Nifty, we see a lot of call sellers have exited from all these positions as we got a good up move. The good resistance is coming in at 38,000, but even there the few call sellers have exited and the put sellers have come in. Okay, and the price where it can take the strike price that can give us a good return probably is 37,500. If in the opening we get a dip until 37,500, would come somewhere over here. We'll see if we have a CPR level. Yeah, 37,500 is exactly at the CPR. Probably if we get a dip until here, a buy cannot be ruled out. A buy can work out based on the open interest. We do have some support at 37,500 because a lot of call sellers have exited. The highest number of call selling exit is on this strike price 37,500, and put sellers have come in, and obviously 37,000 is a good support. I don't think we'll go there. So I think we will be range bound between 37,500 and 37,800. If 800 breaks, then we'll see higher levels of 37,200 and 300. So that would be our plan. Now just looking at the Nifty chart, see Nifty had a bigger sell-off at the opening itself. In the first 15 minutes, we almost touched 16,830. If we had this level that was perfectly marked, let me just shift to a 1 hour chart. If somebody was positionally short, definitely they would have booked here. That's why this another reason this bounce came. You see here we had taken support earlier. Perfectly we came and took support at the exact same place, that is around 16,839, which was marked in so many of my videos. Now we'll just mark this and keep. We'll never know if the market is going to come down again, but the advantage of marking and keeping the levels, right, in case the big move comes suddenly, so we can be ready with all our levels. See, the Nifty had a very steep fall, right? If you see this 1 hour candle, such a big fall. Even on the Nifty, even on 15-minute chart, we have such a big fall. So if we start trading above this 37,000, the previous day high, which is at 37,300, probably we can see the next resistance coming in at this level, 37,500. I'm going to bring this down here because we have some nice price action support here at 17,493. Even if that breaks, then the next target is 17,600. Before that, we have one more small resistance here, 17,600. In case we start slipping, the first support is coming in over here at 17,040, and next obviously would be in this area between 17. I can mark this as a zone instead of putting multiple lines. This zone can act as a good support. If this zone is broken, then yeah, probably again 16,830 can be seen. But if we start trading higher, the first level would be 17,400 and then probably 17,600. And just looking at the open interest for Nifty, see, we do have some resistance at 17,300 and 17,400, both puts, and probably because of this huge move, a lot of call selling has been exited throughout. Even call selling until 18,000 has been exited. But as of now, the maximum resistance, first resistance is 17,300, and then obviously we have even 400, and the maximum resistance is 17,500, and a good support is coming in at 17,100. So in case for some reason we get a dip or a gap down until 17,100, probably we can look to buy. Let me just put on the CPR. Yeah, we do have S1 at around 17, and CPR is only at about 17,100. So any dip closer to 17,100 can be bought based on the open interest at this point. So that's it for Nifty and Banknifty. So hope Thursday will be a good expiry, and we'll just probably wait and take a trade. My view is sideways, but if we get a good move, we will have to change our trend and take a good trade. Thank you for watching.